Today, June 12, 2026, SpaceX began trading on the NASDAQ under the ticker SPCX. It raised $75 billion in its IPO, nearly 3 times the previous record, which was held by Saudi Aramco. Its shares closed up to 90% on the first day. In doing so, Elon Musk became the world's first trillionaire. But SpaceX is only the beginning, because in the same month, June 2026, Anthropic filed for a $965 billion IPO, and OpenAI filed for an IPO targeting up to $1 trillion. 3 companies, combined private market valuation roughly $3.6 trillion. 1 already public, 2 preparing to follow. Very few moments in market history have concentrated this much investor attention, valuation, and narrative power into such a short IPO window. In this video, we break down each company, what it does, what the valuation implies, and where the risks are. And then we talk about the question that is not getting enough attention. What does it actually mean for markets to absorb 3 mega listings with almost $3.6 trillion in combined valuation in the same year? Let's start with the timeline, because the speed of this is remarkable. On June 3rd, 2026, SpaceX priced its IPO at $135 per share, targeting a valuation of $1.75 trillion and raising $75 billion. On June 12th, today, it began trading. Shares closed at $160.95, which is up 19%. Market capitalization, approximately $2.2 trillion. On June 1st, before SpaceX even priced, Anthropic, which is the AI safety company behind Claude, confidentially submitted a draft S-1 registration statement to the SEC. Valuation, $965 billion. Target IPO window, October 2026. On June 9th, 8 days after Anthropic, OpenAI, which is the company behind ChatGPT, filed its own confidential S-1. Target valuation between $850 billion and $1 trillion. Target listing, late 2026. 3 filings in 12 days, approximately $3.6 trillion in combined private market valuations, with 1 already public and 2 preparing for potential listings within months. To put that number in context, the combined GDP of France and the United Kingdom is approximately $5.5 trillion. We're talking about 3 companies representing valuation equivalent to more than half of that, entering public equity markets in a single calendar year. The question is not whether these are significant companies. They clearly are. The question is what it means for markets and for investors when the pipeline is this large and this concentrated. Let's take each company in turn. SpaceX is the anchor of this pipeline, and it has now crossed the threshold. At its IPO price of $135, SpaceX carried a valuation of $1.75 trillion, which could have made it the 7th largest company in the United States at listing above Tesla. Now, after its first day of trading, closing at $160.95, its market capitalization reached approximately $2.2 trillion. The $75 billion it raised in this IPO dwarfs any prior listing. Saudi Aramco's raised $25.6 billion in its 2019 IPO, later increasing to $29.4 billion after the green shoe option was exercised. Even using the higher figure, SpaceX raised more than twice as much. Most people think of SpaceX as a rocket company. That's no longer the primary business, guys. As of Q1 2026, Starlink, which is SpaceX's satellite internet division, accounted for approximately 69% of total SpaceX revenue. The company had 10.3 million subscribers across 155 countries as of March 2026, and analysts project that number reaching 16 to 18 million by the year's end. Starlink is internet infrastructure for places where traditional infrastructure cannot reach. Remote areas, disaster zones, maritime routes, military applications. Governments and armed forces in multiple countries have already signed contracts for Starlink connectivity. SpaceX also holds multi-billion-dollar contracts with NASA and the U.S. Department of Defense. It is the only private company authorized to launch humans to the International Space Station. SpaceX is not a rocket company that happens to have internet. It is increasingly an infrastructure company that happens to launch rockets. The risks are real. At $1.75 trillion, investors were pricing in substantial future growth, and the first day pop to $2.2 trillion implies the market priced it even higher. That leaves limited room for execution misses. SpaceX's own S-1 disclosed losses in prior years. Now, this is a company investing aggressively in infrastructure, Starship development, satellite production, launch facilities, and it is not optimizing for near-term profitability. Elon Musk holds a substantial ownership stake and maintains control over strategic decisions. His other ventures and his public profile introduce governance considerations that institutional investors will weigh on an ongoing basis. The first day performance was historic. What the stock does from here depends on whether execution matches the valuation that public markets have now assigned. Anthropic was founded in 2021 by Dario Amodei and a group of former OpenAI researchers who left over concerns about the pace of AI development and safety practices. Their core thesis? That safety and commercial viability in AI were not in conflict, but that you had to build for safety from the beginning. The company's flagship model is Claude. Its primary customer is business, not the general public. In May 2026, Anthropic closed a $65 billion Series H funding round at a $965 billion post-money valuation. That followed a valuation of approximately $183 billion in late 2025. Meaning, the company's private market valuation increased roughly 5 times in 8 months. Its annualized revenue run rate hit approximately $47 billion in May 2026, up from roughly $10 billion the prior year. That's not linear growth, that's near vertical. The company formally confirmed a confidential S-1 filing on June 1st, 2026, with an October 2026 IPO target. Behind Anthropic is a specific set of strategic partnerships that define its position. Amazon has committed over $8 billion in investment plus compute access through AWS. Google has committed up to $40 billion in cash and compute. Both of the 2 largest cloud providers are invested in the same company, a structure that reflects how central Anthropic's models have become to enterprise AI infrastructure. The risk in the Anthropic story is not the revenue. The risk is the valuation trajectory. Going from $183 billion to $965 billion in 8 months is extraordinary, but it means public market investors are being asked to accept a valuation they may have already priced in several years in continued acceleration. If revenue growth decelerates, or if enterprise AI competition intensifies, then the public market may re-rate the stock below where private investors entered. Whether the October 2026 window holds and at what price will depend significantly on market conditions and investor appetite for AI exposure after SpaceX's debut sets the tone. OpenAI is the most recognized brand in this pipeline. It's also the most structurally complicated company to take public. ChatGPT had approximately 900 million weekly active users as of February 2026. That future has no real precedent in consumer technology history. OpenAI has more than 50 million paid consumer subscribers and more than 1 million business customers. Annualized revenue crosses $25 billion in early 2026. That is extraordinary. Now here's the complicated part. OpenAI is projected to lose approximately $14 billion in 2026, despite that revenue. The company's own internal projection suggests that it does not reach profitability until 2030, with cumulative losses potentially exceeding $44 billion before then. The structural explanation? Inference is expensive. Every query to ChatGPT at 900 million users carries significant compute cost. The company is spending well above its current revenue base to support that scale. OpenAI operated as a nonprofit-controlled entity until late 2025, when it completed a restructuring into a for-profit public benefit corporation. That restructuring cleared the legal path to a public listing. OpenAI filed its confidential S-1 on June 9, 2026. Goldman Sachs and Morgan Stanley are managing the offering. The target valuation range is between $850 billion and $1 trillion. The window listing is late 2026. Company with $25 billion in revenue, $14 billion projected in losses, and a $1 trillion target valuation has no direct comparable in stock market history. Guys, investors are being asked to price in a bet that compute costs will fall, enterprise revenue will scale, and consumer dominance with 900 million users is worth that gap. Whether public markets share that view, at those numbers, it's genuinely unknown until the roadshow. Here's the question that financial analysts are asking and that most retail coverage has not addressed directly. Can public markets absorb this much new mega cap supply in a single year? This is not a theoretical question, guys. When large companies go public, capital has to come from somewhere. Institutional funds rotate out of existing positions to make room. Passive index funds rebalance their sector weights when new large cap names are added. The sheer volume of new equity can create temporary pricing pressure, not just on the new companies, but on existing holdings across related sectors. SpaceX has now priced. Its $75 billion raise is nearly 3 times the largest capital raise in IPO history. That capital came from somewhere in the market ecosystem. Anthropic is targeting October. OpenAI is targeting late 2026. The 3 listings are spaced out across roughly 6 to 7 months, which reduce but does not eliminate the simultaneous demand effect. Institutional appetite for AI-related exposure has been significant throughout 2025 and into 2026. Retail investor interest in all three companies is arguably historic. The SpaceX IPO generated retail demand at a scale that led Elon Musk to consider allocating up to 30% of shares to individual investors. That's well above the typical 5 to 10%. U.S. capital markets are the deepest in the world. The S&P 500 represents about $50 trillion in market capitalization, depending on market levels. Three companies adding $3.6 trillion in total over the course of a year represents a meaningful but not unprecedented percentage of that total. All three companies sit inside the same high-growth future infrastructure narrative: space, AI, compute, and connectivity. All are either pre-profitability or carrying significant ongoing losses. The concentration of risk profile means that a shift in AI sector sentiment, from regulatory action, a high-profile model failure, or a broader market drawdown, could affect all three offerings simultaneously. Private market valuations and public market valuations are not the same thing. The $3.6 trillion figure represents what sophisticated private investors agreed to pay in controlled rounds. Public markers set their own price. History offers multiple examples of where the gap between private and public valuation closed downward at listing. SpaceX's 19% first-day gain was a strong signal, but it also means that the market has now assigned a $2.2 trillion valuation to a company that IPO'd at $1.75 trillion. The benchmark for Anthropic and OpenAI has moved. Three things worth keeping in mind as this pipeline completes. First, private valuations and public market valuations are different things. The $3.6 trillion figure reflects what sophisticated private investors agreed to pay under specific conditions. Public markets will set their own price, informed by earnings reports, macro conditions, and investor sentiment. And that price is not guaranteed to be higher than the private round. Second, these are three very different risk profiles. SpaceX is the most operationally established. It has real infrastructure, real government contracts, real cash flow, but it carries ongoing capital intensity and government concentration in Musk. Anthropic has extraordinary revenue velocity, but a valuation that expanded more than 5 times in 8 months, and significant dependence on Amazon and Google as both investors and customers. OpenAI has the largest consumer base in AI history, but an unresolved path to profitability and a valuation that implies significant execution over many years. Third, timing will matter. The Federal Reserve's rate environment, the broader equity market, and the AI sector sentiment will all influence where Anthropic and OpenAI actually price, not just where they hope to price. SpaceX's successful debut has set a positive tone, but conditions in October and December 2026 will be different from conditions in June 2026. The $3.6 trillion pipeline is real. Whether all of it clears at private market valuations or reprices the way to listing is what the second half of 2026 will answer. History is being made in real time. The largest IPO ever began trading today. 2 of the most valuable private AI companies in the world are preparing to follow. Very few moments in market history have compressed this much valuation, investor attention, and narrative power into a single IPO window. Not in the dot-com era, not in the mobile era, not in the cloud era. 3 companies that between them represent the infrastructure of space, the leading edge of enterprise AI, and the most widely consumed consumer AI product in history are all entering public markets simultaneously. Whether you participate or you watch from the sidelines, understanding what is actually happening and why matters. We will be covering every step of this as it unfolds, so subscribe so you don't miss it. And if you have questions about any of these companies, the valuations, the risk, what the absorption question means for your existing positions, drop them in the comments.